Assalamu alaikum. Good morning, everyone. Thank you, Trevor. It's good to be back again. Not the 7th year, but hope so sometime soon. Role of global shipping in trade and emission. Today, obviously, it's very clear that we are at a crossroad from a digitalization perspective, from decarbonization, geopolitical conflicts, as well as the investment strategy. So it's very challenging to decide what would be the path going forward with the uncertainties around the whole 4 aspects of the shipping industry as of today. We've seen that a lot of ship owners have started to invest in conventional fuel and try to kind of push sustainability forward. But again, the infrastructure is still not ready to kind of meet, or maybe the disconnect between the investment and the infrastructure is still not helping the shipping industry to really achieve what we should achieve in a short period of time. IMO says that we contribute 3% as an industry to the emissions, but if we look into what can happen in 2050 if we don't achieve that net zero emission, and what happens if we don't spend or find the right investment to kind of meet that target. According to the same research from IMO, they anticipate that the emission will increase by 50% if we assume business as usual, and we don't find the right opportunity, which is going to be quite challenging because it's quite significant. If we look at the green finance today, the evolution of green finance is quite impressive. We look at $8.2 billion in green finance this year, with a growth rate of 22.7%. We expect about $18 to $19 billion in 5 years' time. And if you look at the bank's portfolio today, we've seen quite a decline in European banks, and that's mainly because of the regulations and the pressure on the environment front, with an increase in Asia and Middle East, which has less stringent regulations when it comes to Poseidon Principle application and other environment issues that's impacting the whole industry in general. The landscape of ship finance today, I think from an institution perspective, commercial banks are leading by 38%, and from type of investment, green bonds are 40%, and geographical structure, we see Europe is advanced given the strong financial market as well as regulations. And in terms of industries, renewable energy is leading by 40%. Shipping, as a shipping industry, we are probably around 20% so far. And the reason I think renewable energy is leading, because we've seen quite a good investment in renewable energy last year. In India alone, we've seen 8 successful startups turning to IPOs, raising in public funds hundreds of millions of dollars. If you look at the drivers and the challenges today for ship finance, there is a common factor basically impacting challenges and an opportunity, which is basically the regulations. So the regulation is from one hand is pushing for making more investment valuable for investors and ship owners, but on the other hand, we've seen there's a lot of restrictions in terms of how the regulations is going to play out, in terms of facilitating the investment in the green finance. Capital allocation is, in my view, facing 2 challenges at the moment. The first one is balancing profitability with sustainability. As everybody says this morning, we all need to make money. So this is one of the challenges we face today when it comes to investing in green finance or investing in green assets. And the other element is the economic volatility and the political uncertainties, which basically goes down to what we are expecting to see from the tariffs, or the tariffs war, which is going to probably be concluded in the next few months. So depending on which mouse is going to take the cheese, I think there will be either a huge impact on the shipping industry if the tariff war started to become quite aggressive, or we will see a very prosperity in terms of mainly in the tanker business in the next few years if the tariff wars calm down and doesn't impact the industry in big deal. The role of strategic financial leadership is a very key point when it comes to investment, and I think a balanced approach is very, very important, which is basically comes with a blended financial strategy that consider private equity, public fund, as well as tapping into other alternatives such as green bonds, sustainability, and sustainability-linked bonds. the decision obviously depends on how the organization is set up and what would be the best fit for the organization for a longer future run and future proof of business. I think it's another very important point here. We have to learn from the cycles, from past cycles, to be able to charter a sustainable future. And we've got two graphs here looking at the S&P activity over the past 5 years, as well as the commercial activity over the past 2 or 3 decades. From an S&P perspective, I think we've seen a kind of a stable trend in terms of low activity at the beginning of the year and high activity towards the end of the year, which is basically a kind of a pattern happening over the past 3-4 years. And when it comes to commercial activities, I think it's a kind of a cycle of 9 years where we see a peak in every 9 years in terms of commercial activity, and it's obvious from the graph that we are at the peak in this year. So we really pause here to see what will happen in 2025, whether it's going to be a kind of gradual decrease in activity given the natural business cycle, or it's going to be a sharp drop in activity, which could be the reason if we end up with a war and a tariff and kind of commercial and trade war between the East and West. The future is obviously very clear, so sustainability is an important element, and we can see from the SP 500, for instance, the companies with sustainability exposure and sustainability reporting and so on and so forth will have a better returns. There is a small spread of about 100 basis points there, and this applies to the 7 magnificent financial markets. I just gave one example here, but it's kind of a trend applicable to all the more. The strategic takeaways from this presentation today is obviously adopting a long-term vision is a very important element, and obviously leveraging technology. We expect, as per Deloitte and Touche, we expect $357 or $6 billion to be spent over the next 5-6 years to kind of digitize the maritime industry. So there's a lot of opportunities in that front, and obviously diversifying financial resources or funding resources from a private perspective, from a private funding to a public funding, or obviously the alternative fuels such as the private equities, VCs, or the tokenization, for instance. There's a lot of options yet available for ship owners to consider when it comes to that business. And obviously, final point is to collaborate across the supply chain, as everybody was talking about in the morning. Collaboration is a key for the industry forward. And obviously, it's always a point to consider. Investment has to always be, a very well studied and very well done in a proper way. So thank you, everyone.